What's up, guys? Welcome back to another day trading video, and today we're going to go over another fundamental technical analysis kind of video. I'm kind of seeing that actually a lot of you guys, I think a lot more views come in when I do not fundamental mind videos where I teach about the mind, how to be more productive. So we'll get into these videos next week. And this week I'm going to try to teach you everything about the stocks, but next video definitely over the mind, over the body, so over the eyes technically. But that's besides the subject. I just want to tell you that, so stay tuned. But in today's video, we are going to teach about risk to reward and a little bit over win rate. So what is risk to reward? Risk to reward is very simple: the potential gain compared to potential losses. So if you ever see on this chart, this like red box with this green box, where the green box is much larger than the red box, that is a risk to reward ratio. All right, so we're risking this amount of money to win this amount of money. All right, so within a trade, you have to you can't just gamble all your money and say, "Oh, if it gets big, I like." No. You have to be smart with it. You have to be calculated with it. You have to know when to get in and you have to know when to get out. All right, kind of like gambling, but it's not gambling. So let's not even think about it. I know I said it, but don't even think about it. All right, yourself. All right. So with risk to reward, we have a 2-to-1, a 1-to-1, a 3-to-1, and that continues on. We can have, it doesn't have to be a 2-to-1. It can be a 2-to-2, but that's essentially the same as a 1-to-1. But it can be a 3-to-2 or a 4-to-3. Doesn't matter. But I'd rather the simplest one, the common ones you'll see throughout the internet: a 2-to-1, a 1-to-1, 3-to-1. Some people will catch an 8-to-1, which is very impressive, a 10-to-1, or a 20. They'll catch big wins. All right. But let me show you what that means. Like 2-to-1, 2-to-1. What does that even mean? I'm going to show you that right now. All right. So what this means is we're risking twice the amount to win the original amount. That's a 2-to-1. So let's just say $100. I put $100. No, not $100. But let's just say I'm risking to lose $100 to win twice the amount. Right? Risking what you're willing to lose times the amount, like say 2 or 1 or 3. Let's just start over 1. I'm risking $100. I'm risking to lose $100. I'm comfortable losing $100, but I'm risking that $100 to win twice the amount of $100. What's the twice the amount of $100? 100 times 2, very simple, 200. So I'm risking to lose $100 to make a potential gain of $200, which would be worth the loss. All right, and with that, you only have to be right one out of the 3 times of the trade. So if you take 3 trades, you only have to be right 1 time, and I'll explain why. If you're wrong the first time, you're down $100. If you're wrong the second time, you lose $200. But if you're right that third try, if you're right that third trade, you'll make everything back, and you won't even lose money. You'll be break even. So with that, you only have to be right on one of the 3 trades you take to break even, to lose no money. All right. And if you lost one and then win the next one, you won't be up 200, but you'll still be up. So you lose 100, but you made 200. So right there, even, and then you made the 100. Very simple. All right. You just have to use some little bit of math, but it's not that complicated. Very simple, easy math. A 1-to-1, I'm risking to lose 100 to win 100. So I have to be right on one of the 2 trades that I take. All right. But if I'm right on the on one of the 2 trades, I'm just gonna break even. I'm gonna win no money. But I didn't lose any money either. So that's a very good thing. We had to focus on not losing money. All right. We don't have to focus on winning money. We have to focus on not losing money. That's the thing. We don't really focus on winning money. We focus on our trades mostly, actually. We mainly focus on not to lose the money so stupidly. All right, that's why you have technical. That's why you have these things to help us, like the risk to reward. All right, then we have simple 3-to-1. So I'm risking $100 to win 3 times the amount. With 3 times 100, 300. So I'm risking 100 to win. I'm risking to lose 100 to win 300, and I only have to be right one of the 4 times. So I can take 4 trades, and if I'm right just one of those times, 20, the 25% chance. If I'm right just 1 time, I won't lose any money. All right, so I lose. That's 3 losses in a row. I'm down $300. I feel like a sucker. Fourth trade, boom, I won, and now I'm break even. And since 3 of those trades went bad in a row, and the fourth one it did good for me, I would be like, that's a good day. I'm gonna call it quits and not even trade for the rest of the day. All right, because at least I'm not in the red. I'd rather have a day where I don't win any money than lose any money at all. Why would I want to lose money? No one wants to lose money. They would rather. Some people get uncontrollable and try to win that money back, but you have to remain control of your mind. That's exactly why I'm gonna go over more mind videos. You have to be more in tune with your head or with your mind, so you don't lose control over your body. Because that is what happens. Once you lose control over the mind, the body starts to react and starts to take control, doing the trade for you. It's not your body taking the trades. It's supposed to be your mind taking the trades, not your body. Because if it's your body's just full of emotions. Your mind isn't. That's why you feel sad in your body, not in your head or your mind. You feel sad. You feel sad in here, not in here, but in here in your heart. The heart is the body. You're not supposed to trade with the heart, with the body in trading. You're supposed to trade with the mind. But that's over there. That's another subject. Then we have to calculate our win rate. How many trades are we winning in overall? So the win rate is very simple. You have to calculate your winning trades. Sorry, you have to calculate your winning trades over all your trades. So divide your winning trades by all of your trades. So if I took if I won 7 trades, and out of all those trades, I took 10 trades in total, I have a 70% win rate. All right, very simple. I think it's actually 10 divided by 7, if I'm not mistaken. If you get a decimal, that's the correct number. But yeah. So it's actually I'm pretty sure it's reverse flip, but it's very simple. It's still the two. All your trades divided by your winning trades. You have to divide all the trades you took by all the trades you won, not lost, but you won. All right. Then you'll get your win rate percentage. If you have a 65% win rate, or equal to that or greater, you are in the good. All right. You're winning more than half of the trades you're taking. All right. So if you're just 50-50, it's kind of breaking even, and it's not, and most likely it's not going to go in your favor. But if you have more than a 50-50 chance where it most likely is going to go in your favor, then that is most likely what's going to give you money. All right, that's the outcome. We want all these things to build up so we can be profitable. All right, that's the goal in trading, being profitable. Much harder than it. Much easier said than done. All right, much easier said than done. There we go. And we have to be consistent. All right, consistency is key. All right, is key. Consistency is key. If you're not consistent, then there's no point of it. One day you're doing it, then one day you're not, and then you're not, and then like it's just randomness. It doesn't work. But if you're consistent with it, if you keep going, boom, 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 boom. If you miss a day, that's all right. That's all right. If you're consistent with it over the long run instead of the short run, day. If you're consistent with it over the long run, like so months and months or even years and years. For example, I was consistent with trading for 3 years. That is the key. You have to be consistent. All right. So be consistent with your winnings. If your win rate is more than a 65 and you have a positive ratio, so not a 1-to-1, I recommend a 2-to-1. You can start with a 1-to-1, but I recommend a 2-to-1. So you're risking twice the amount you're willing to lose, and you're consistent over more than 4 or 5 weeks. So let's put 4 or 5 weeks. If you have 4 or 5 weeks of profitability where you're profitable over 4 or 5 weeks in a row, then you might be a profitable trader. But it doesn't sound that easy. I tell you, I'm warning you, it's not that easy. It takes years, maybe months. Actually, yeah, months, but years to control it, to get good at it. Very difficult. Like I said, much easier said than done. But yeah, that is risk to reward, kind of like risk management of trading. There's three pillars: strategy, psychology, and risk management. So that was kind of risk management right there. And I did remember saying I would teach a video on this, and I did actually. But yeah, that's it for today's video, guys. If you like the video, please like, comment, subscribe, ring the bell, share with all your friends, and yeah, just comment if you have any questions. Please, guys, share with all your friends. Please grow the channel, and I'll see you guys in the next video. Peace.